Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, February 1st, 2018. I wanted to do a quick overview of the markets and some of the things that I've covered recently. We'll start out here with the 60-minute chart of the Nasdaq 100 futures. And what I've said all week is the most important developments that we've had. We finally had those trend line breaks that I've been talking about on all the major large cap indices. So those are legit, and I continue to believe the market's on a sell signal. However, I did say the other day and continue to believe that you're not going to see much movement, relatively speaking, until the rest of the FANG stocks report. Last night we had Facebook and Microsoft report after the bell, so those two are out of the way. But tonight we have the three big ones: Apple, Amazon, and Alphabet, all report after the bell. So, like I say, the fireworks shall begin tonight after the close and continue. And I'm talking about volatility, whether it's to the upside or downside. I still strongly favor to the downside, but expect a lot of back and forth chops. If you're trying to trade this market with tight stops, good luck with that, because one thing is we know that volatility has increased and probably will continue to increase, I think, going forward into next week. So, um, you have to decide how to trade this market. I have swing positions, and I think there's been a lot of, well, I know there's been a lot of good, day trading ops, hitting QQQ. I've been able to cover shorts at this level on the NQ, trade long. Um, we're down at that level again, and I don't think we're going to go very far below that today. Anything is possible. You might see some selling. Remember, Apple has already broken down. Apple is the one FANG stock that has actually broke down about a week or so ago. I pointed that out, and I'm talking on the more significant daily time frame. So we'll see what happens after they report tonight. We'll see what happens when Amazon and Alphabet report. And remember, there'll be some back and forth noise and volatility. So adjust your, trade accordingly. If this isn't your cup of tea, stand aside, wait to see how things play out into next week, and maybe there'll be a buy the dip opportunity. Maybe the market will pop up to new highs, and you want to buy that if that's your thing. Um, but I'll update you as things go along. But here's what I'm watching right now. The bigger picture is this trading range recently. We've been trading sideways now for well over a week, almost 2 weeks now. But again, the important thing is we had a breakdown of these trend lines on all the major indices. I'll cover those here in a second. And that's an important level to watch. We're dancing on it now. Call it about 6,900 or so on the Nasdaq 100. Again, on these futures that I'm looking at, and you can see my near-term targets are these horizontal lines down here, and I do think that we can make it down to this support zone down here that runs down to about as low as 67.05. And just to show you that volatility that I'm talking about, this is a 5-minute chart, meaning 5-minute period candlesticks. Goes back 5 days. It's the QQQ, and it shows you the after hour in regular session trades. The dark areas are the regular trading session. The light gray areas are the after hours. So you can see what's going on here. We've had a lot of rips and dips, including one pretty decent rip, and again, nothing major. The big picture is we've gone sideways now for 5 days. You can see that we're about where we were, just a little lower right now than we were 5 days ago when we go back on this chart. But that's what it's been, just a day traders market. Volatility is picking up before and after hours. That's where my preference is trading NQ because it trades around the clock, or mostly around the clock, the E-minis, but you can also trade QQQ. There's some liquidity after hours, but again, that's only if you're a very active trader. If not, focus on the swing trade, those key levels, 60-minute charts, and depending on how the 60-minute charts develop, I'll soon turn more of my focus out to the daily charts. But, for weeks and even months now, it's just been a slow and steady grind up. So there just haven't been a lot of uh, significant technical developments worth noting on the daily time frames. That's why I've been living in that world of the intraday charts, particularly those 60-minute time frames. But there it is. So you can see this is what happened last night. Facebook really led the way with an initial sell-off, then a recovery, and now boom, we're down again. So the Qs have just been all over the place since closing last night about here. So we're indicated to gap lower today right now by relatively small amount. Okay, and take a look at S&P 500. Same story again. It's everything I've already covered. We have all the major indices on sell signals via these, at least by these 60-minute charts. And remember, sell signals, technical chart patterns, and the expected move is commensurate to the time frame you're trading. I'm looking at 60-minute charts here. So these aren't the daily or weekly charts. This doesn't indicate a 10, 20% plus correction. Anything's possible. And again, that's like I said, we'll move our focus out to the daily charts. Should these develop into more than just these, a pullback, commensurate with these patterns right now, technically, has this pattern met its pullback? It has. So if you're bullish and you want to buy a dip, you look at these patterns, this contracting channel, some of these are in wedge type patterns. You typically you're looking at a move about equal to the widest part of the wedge. If you're looking at a rising wedge, this is more of a contracting price channel, but same story. So um, it is completely possible that this correction is over. You can see very good support here on these lines that I have drawn. These are the same lines I've showed. There's a support line with a lot of reactions back there. That's where we're at on the SPY. So if I had to guess from where we're at now, by the time you get, watch this video, will have opened. We'll probably bounce at the open is my guess because we're once again at support. But my only concern is, and the reason I'm not so hot to buy it this time around, I did buy the last time we fell here on the Nasdaq 100 covered shorts, reverse long, is because we've already tapped that level several times. And when you have a support level, it's like hammering on something, tap, tap, taps. The more you hammer it, sooner or later it's going to break. So at this point, it's late in the stage. I'm more interested now in waiting for a break of this support as the next sell signal versus buying it like it is right here with the Nasdaq 100 at support. So I showed you the S&P 500 a minute ago. Here's the Dow. I don't have as many levels marked up. I don't trade the Dow. If you do, and you're a member of the site, just let me know, reach out, and I'll be glad to give you some targets. But the story's the same, and that's what I said before. You needed to see not one, but all three of these indices break, and they all did so right around the same time. Those breakdowns were impulsive, meaning big red candles. That helps to validate that. On the Dow, we had a wedge overshoot, what I call, where we overshot the wedge and then came back down below. So that's it. Near term, I see more downside. Um, in fact, I'd like to wait till we see maybe some bullish divergence set up on the 60-minute charts. We have potential divergence here. You can see if we go a little bit lower and turn back up on the MACD, potential divergence. But I can say this, um, I'm a little skeptical right now. Remember, the market has a lot of hot air in it, so I'm more open to the possibility that this, again, we'll see what the big three do tonight and how the market reacts. So I guess what I'm trying to say is I I wouldn't do anything super heavy in front of these companies reporting, even if there's a big gap down tomorrow or a big gap up. It can go either way. Kind of let the dust settle and see what happens in the next week, and then we'll identify some support and resistance levels, price targets, things like that. And more importantly, I have a ton of individual stocks. I've cleaned up updated the trade ideas yesterday. Everything on there listed now as an active long or a short or a trade setup is an official trade. They're, meaning they're still good. Um, I moved out the completed trades that already hit profit targets or stops. Those are all moved out to the completed trades. So I will be adding some more trade setups, both ETFs as well as individual stocks, and I plan to do that throughout this week and into next. Gold, not to report. Like I said, in my most recent analysis, I have a downward bias on gold, but again, there's the pressure if my call on more downside in equities is correct, that will give a tailwind to gold because that's a flight to safety instrument. The miners, however, I think they'll underperform gold going forward here, even if gold tends to hold up. Crude futures, here's crude. Let me turn off these marks. Crude seems to me it's topping. I expect more downside. I've been for a while stating that I think the upside is minimal compared to the downside risk. So at best, I see it consolidating, and that's what it's been doing for a while. But I still remain intermediate term bearish on crude and the energy stocks, and those most certainly have been playing out. We're profitable on our energy shorts now. Um, So I think there's more downside. I mentioned covering one position just to gain a little bounce, but I plan to be back short on that. That was XOP, or the what was it? DRIP, DRIP. Silver, same story. Just watch this 1692-ish level. That looks like support. Silver appears to be topping. Again, upside's limited, but the bigger picture is for a while now, pretty much all year we've been trading sideways. So, if we were, bullish on these back in December, I can't remember, November, we went long the precious metals, but then since then, I got out, was looking for, thought the run was over, and although it hasn't really corrected. We haven't gone anywhere. You can see that since this is the beginning of the year right here. It's 2018, and we've gone sideways. So we're right about where we started the year now, and I do think there's a good chance we break down below that and have some downside movement in silver. Natural gas. This is a 60-minute chart, but it shows you. I guess that's the futures roll. Let me look at another chart, and I'll show you. This is one I posted in the trading room yesterday. Okay, this is the 60-minute chart. Those were the continuous contracts. These are the March contracts here. So it'll show you um, we were at the top of this bearish rising wedge pattern. Was that yesterday or the day before? I'll pull that up in a second. And first I didn't have a strong opinion. Somebody asked me my opinion on natural gas. And then I did notice this. We had this nice clean bearish rising wedge. We were there at a divergent high, and you guys know I love those divergent highs and lows on the 60-minute time frame. They make for great swing trading ops. So my expectation was for a move down to the bottom of the wedge. And we also had horizontal support. We got that move and then some. We sliced right through there. This is pretty bearish price action. Now we're at support. You can see I have a support level at about 2905, $2.90 and a half cents. So there we're at 2.912. My expectation now, we've got some divergence forming. I think we'll get a bounce here on that gas, but that drop certainly played out with a pretty straight move down. And more importantly, let me show you another chart here. Okay, you guys may remember I've posted this one recently. We were bullish and long natural gas as an official trade idea, not too far off the lows. It was set up real nice, and I believe that was a falling wedge pattern. So we used UGAZ, the three-time leverage, as our long trade. And at the time I showed you this chart here, that I've noticed that in recent years there's been a trend of nat gas prices rallying up right around the end of the year. These blue dotted lines you can see are the year breaks: 2015, 2016, the beginning of the year, 2017, and 2018. So the pattern I noticed was a rally year end. Weather's cold, obviously, so nat gas prices are going up. 31% gain there, followed by a rip. This one happened to kick in before the end of the year. Remember, every year the seasonality, things are different weather-wise and supply demand wise, but it's close enough, and you can see that sell-off continued into the end of the year. Here we go again. December, we had a 49% rally, followed by an even sharper sell-off that started right after the first of the year. December, this one started November, 53.5% rally, almost to the button right on New Year's, started selling off. Here we go again. This one started a little late, but we had a 42% rally to the highs, and we've already given back half of that now, and that chart on the 60-minute is bearish. So again, my expectation going back to that chart is only for a kickback rally here off this level, maybe a little snapback bounce. Wrong tool. Try to grab this arrow tool. And if you're interested in trading it, I'll try to give you some targets. But I think there's a good chance, based on this wedge, that that year-end rally may be over. So natural gas near term, very near term, I'm looking bullish for a bounce. And again, I'll have to give you some targets there. Maximum right now, maybe up to that level. Yeah, I could see a back test of that 303 level, and then maybe some more downside there on that gas. Okay, why don't we just wrap it up there? I think that's most of what I've been covering in recent weeks here on the futures contracts, the major indices, precious metals, and a couple of the commodities that I'm looking at. So that's it. And again, let's just see what the big three do tonight after they report. Watch out, and remember, it's not always the market's initial reaction, because a lot of times the initial reaction is faded. So don't try to read too much into what happens into after hours and pre-market tomorrow unless we're slated to really gap up or down by a large amount. And again, I made it clear my bias is for a downward gap. I'm positioned that way, but nothing crazy right now. I'll wait to see what happens into Friday and next week before, committing a little bit more, because the trend has been very strong. And again, we've already milked a good percentage of the pullback on these 60-minute time frames. A lot of the expected move has been met already, but it can morph into something more, or it may be another great buy the dip opportunity, because we're still, in the bigger picture, we're still in that melt up mode in the market. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed.